Thank you for joining the Resilient Cyber Show. My name is Chris Hughes, and today I'm joined by Ed Sim. Ed, thanks for being here.
Yeah, thanks for having me, Chris.
Yeah, I was just telling you, kind of fanboying off air a little bit about how I've been following your What's Hot in VC newsletter for a while now. And each week as I'm curating content on my own and looking at market dynamics, I'm like, all right, let me see what Ed is talking about that I'm missing. But for folks that don't follow you, don't follow your newsletter, aren't familiar with the Boldstart team, can you tell us a bit about yourself as well as your team?
Yeah, so I'm the founder and general partner of Boldstart Ventures. I like to say that we're an inception stage fund, meaning that we like to partner with technical founders at company formation, which means really we're iterating with lots of people as they're thinking about their next thing and helping them accelerate that path through the idea maze. And what's unusual about us is that we'll write checks as small as $250K and up to $15 million right out of the gate. And so we're almost like a one-stop shop, idea based on unique insights. And I think the other part is we're very, very focused on what I call the autonomous enterprise. We can dive more into that, but it includes cybersecurity, infrastructure, even some app layer stuff. Notice I avoid the word AI. So it's just a technology. So anyway, and by the way, the reason I'm on the show, I guess, is like probably 25 to 30% of all our funds are invested in cyber security.
Yep. Yeah, you got on my radar because of that, Protect AI and Sneak and other investments and things that you guys have been focusing on. And you've been talking about this space a lot too. I'm going to dive into some of those topics, but you all did recently announce a new fund and including, that focus on autonomous enterprise. And when I heard that term, my mind, of course, thinks agentic AI. Or agentic to stay away from the AI phrase. But, what does that mean exactly? And what made you guys kind of really focus on this particular area when it comes to your new fund?
I have to be serious with you. I kind of almost viewed it as a kind of a joke in a way. The autonomous enterprise, like, do you think a business will have like one person and 1,000 agents really running the whole thing? But I threw that up there almost as an aspirational goal. We're so far away from that and we will never get there, but I think it's kind of a fun thing to strive for, right? And that's kind of the good nature and fun stuff with technologists we like to kind of think about. Two is I just didn't want to use the word AI because I've been doing venture. This is year 29. I'll be coming up in year 30 next year. So I've lived through everything from Mosaic browser to Netscape, the .com boom and bust, 2008 financial crisis, rise of mobile, rise of cloud, rise of everything else. Guess what? There are no mobile companies. There are no cloud companies. They're just companies solving problems, right? And so that's kind of what we think about. But when we think about the autonomous enterprise, I just think about the world, and we think about the world where what happens when the world becomes actually traffic where 30% is machine and 70% is human, and that flips actually even more to 99.5% machine and 0.5% human, because I think that's where we are going. We think you're gonna have to rebuild all the primitives to actually make that happen, right? Whether it is the underlying infrastructure, whether it be security, right? How do you do agent authentication, authorization? How do you monitor that stuff? How do you block kind of good behavior and bad behavior from certain bots coming in? What do kind of the agentic workflows look like? How do you orchestrate that? How do you have interoperability? So all those things, I think that were built for humans aren't going to scale for agents. So that's something that we're really excited about and kind of continuing to invest dollars behind.
Yeah, I think it's, it might be a joke in terms of the autonomous enterprise, but we are seeing a dynamic change, whether it's the productivity of developers or not. You saw that recent study that you shared. Yeah. It's a kind of a debatable topic, right? But to your point about agentic identity, folks needing to manage agents, like the traffic being, created by agents and non-human users, the underlying infrastructure, all those kind of things. And when we look at the investment landscape, I follow folks like yourself and others who kind of show that AI is dominating when it comes to investments and checks being written, that kind of thing, startups and so on. What do you think is driving this focus on this area? Do you think it is the fact that it's going to kind of fundamentally change the whole nature of the way we operate online, the way organizations and enterprise operate? What's driving this outsized focus on AI right now? Or folks just, a bit of FOMO even, afraid of missing out on the next revolutionary company? Or what do you think is driving this?
I think it's all of the above. But look, ultimately, I feel like every new kind of technology builds on what was done prior. And if you think about AI, it was really machine learning back in 2017, 2016, 2018. And I feel like the underlying infrastructure for data, for labeling data, for organizing your data was kind of put together. And I'll put the enterprise lens on that, number one. And then number two is that the cloud came along in a very big way. So you kind of combine those two things and then Gen AI. And I think you've got this, I like to say Molotov cocktail of opportunity here. It's going to be like, this is it, right? I mean, and by the way, I think we're just in the first inning around that. You also combine that with the amount of dollars flowing into private capital. And venture capital now is no longer just kind of, the Arthur Rock days of partnering with two technical founders with an idea. It goes all the way up to funding, OpenAI $300 billion. People call that a venture capital fund, right? So companies are staying private longer. There's just so much money out there. And so I think that this is probably the biggest platform shift that we will see in our lifetimes right now. And I think we're just in the first inning. And I think the winners that are out there today may not necessarily be the winners tomorrow. What's not proven so far is what's going to be durable revenue versus, fast growth and kind of things trailing off. We just don't know. So I think all the bets are being made. And I do know that in this cycle, that the winners, the amount of value created by the winners will far outweigh the amount of dollars created, or invested in the losers. The only problem is that there's just going to be a handful. And the dispersion between great and median and terrible is going to be really, really wide. It's probably going to be 2x as wide as it was in the prior era. So I think that comes down to, hey, choosing carefully, getting out at the right times, and maybe being a little lucky as well.
Yeah, I think you're spot on. That actually took me to my next question. Is you talked about being an inception fund, and you guys you've used terminology on your website like kind of backing founders before a category even exists or has been coined, that kind of thing. And as you talked about, there's going to be some outsized winners who dominate the ecosystem and really generate a majority of the returns for investors and so on. But there's going to be losers, folks who don't make it, don't get product market fit, don't get traction, whatever the reason is. When you're out there looking at a team or a founder, I know there's no exact science to this, but I'm curious from your perspective, like, how do you go about discerning who you think is worth, kind of placing that bet on? What are some key characteristics of the individual, the team, their track record, or lack thereof, the charisma, for example, like, what are you looking at?
Yeah, no, I'll give you a variety of perspectives, but the one thing I'll tell you is that I think we live in an era of abundance, and in this era of abundance, capital is extremely abundant. But I think what the scarcity value is in talent, and you can see that right now across the board in terms of the amount of money people are throwing at talent right now. So that's the gating factor to creating real value. And so ultimately for us, people talk about moats and all those things. At the end of the day, when you invest in software, everything can be copied with money and time. And back when I started 30 years ago, maybe you had 18 months to 2 years as an advantage, right? When things were deployed on-prem and it was hard to kind of figure out what the person was doing unless you got a copy of the software, right? And kind of reverse engineered it. Fast forward, the cloud era, you're talking about, 12 months. In the AI era, man, I'm telling you, like right now, anyone can launch a prototype and get something up and running. How you actually deploy that in the enterprise and deal with the last mile and deal with security and everything else, which we can dive into, is another story altogether. But for us, it all comes down to talent. And the framework that we have, that we think about, is something that I call the 5 Ps for inception investing. And this is basically, once again, investing in the way that Arthur Rock used to do it, investing in technical founders, maybe take some market risk, but you kind of knew what they're going to build. Right. And so the first lens is the people. What gives me the reason to believe that you're going to be the one, or your team is going to be the one, to tackle this problem and build something really big? Who are the other potential hires that you're going to bring to your team, for speed out of the gates? Because speed is kind of a real determining factor, right? So I like to say, hey, who are your first 10 hires going to be? You may not get all 10. We'll help you get some of those on board. But what you want to see, Chris, is that a history of people following you, almost like the Pied Piper, of engineers following you, of builders following you, because that indicates that people trust kind of your leadership. Product, what's the unique technical insight? What's the magic that you're going to bring to make a customer's life 10 times better, 100 times better with your product or solution than without it, right? I look at pain. We like to see the burning pain. You want painkillers, not vitamins right now. And I think that's really, really important. And then passion. I think most great enterprise startups are born out of a problem a founder has experienced, and they tend to want to automate it, versus a whiteboard founder that has no experience in the space. Some of those can work, by the way, probably more consumer, but saying, hey, I think there's a white spot here. I have no experience here. Let me figure it out. And, the bottom line is it's going to be really hard. These journeys now used to be 7 or 8 years to IPO. Now it's 15 plus years to IPO. And we need to make sure that you have the passion to survive the ups and downs and the mission to deliver that game-changing product to customers. And finally, this is the most important part. I call it the potential, or what's possible, the art of the possible. How big can this thing be if everything goes right? I do know that 999,000 things can go wrong, But if it goes right, I want to know how big it can be, right? So you add all that up together, and that's kind of how we look at kind of the opportunity within the lens of enterprise.
Yeah, I like that. The 5P framework. I'm gonna have to get that for you and put that in the show notes, but I like that framing really well. And you also said something, I don't know if it's taboo to mention another, venture firm, but something you said reminded me of an article I recently shared, or I will be sharing tomorrow, actually, in my newsletter, is another firm, Foundation Capital. They had an article called Services as a Software, looking back at the past year, basically.
Yep.
And we know there's this big excitement about, the TAM when it comes to software versus services market, and what can autonomous, again, to your word, autonomous, agents and so on do to disrupt some of the services revenue and pull that into, firms where maybe it wasn't accessible as a software vendor historically, that kind of thing. And it was talking about, your point was the last mile. It's not the product. Now people can iterate faster. They can use agentic and LLMs and so on to prototype and produce products faster. Now it's kind of delivery, helping the customer succeed, having those embedded forward deployed engineers is kind of the phrase that's taking hold in some regards. So I like that framing, and I'll shoot that article over to you. You'll probably enjoy it.
That'd be great, and I think it's awesome. I think they're great, and the way I think about it might be a little bit more nuanced and broader. So let's just say Mark Andreessen said software is eating the world, and let's just say that AI is eating software, right? And you kind of look at some of the margins and reduction of seats and all those things like that. Then the question you have is, can agents eat into labor? And I think, and if you say that, hey, AI eating into SaaS might be almost a zero-sum game, because as you grow some of that AI revenue, it erodes other parts of SaaS revenue. I think the bigger opportunity is agents moving into labor. And it doesn't mean replacing someone, but if I can augment you by 10, 15, 20%, so you can do more with less, then I think the TAM for that is probably 5 times bigger. I'm just talking about capturing, if you can provide 30% value in some of these sectors, and right now it's just coding and maybe sales and marketing, maybe a little writing, but I think it will expand more. But if you can capture 5% of those dollars, 10% of those dollars, I'm talking about a TAM that is like 3 times, 4 times larger than the software itself. So that's the game that people are playing. And once again, what's the underlying infrastructure to do that? How do you make it happen? Perhaps you're going to need forward deployed engineers a la Palantir to just solve the problem for people and just deliver the value, right? And I think those are some things that people are all experimenting with right now. None of us really know what's the next 6 months will look like. Who's going to drop the next model? How's that going to change everything? But I think all of us, the most, no matter how old or how young you are, I think the most important part is experimenting and finding your own thing, right? You're not going to have one playbook to kind of grab.
Yeah, I agree with you there. In the article, I'll shoot that to you, but it talks about that aspect of as well, which is iterate and experiment with the customer, bringing that back into the product, quickly iterating and getting that value back out to existing and future customers. Something else that I wanted to ask you about, now we kind of went down this road. The article talks about, the changes to the dynamic of the pricing model, right? Usage-based pricing, seat-based pricing. Now we're moving towards more workflow, and even, the end goal maybe being outcome-based pricing.
Yeah.
What do you think about when you think about that? Like, how do we even frame that? It seems like we're kind of still figuring that out, because each organization has unique context, unique workflows, unique requirements.
We are still figuring that out. Yeah. I mean, as much as hey, it's all outcome-based pricing. I mean, it's going to take a while, because you know what people really love? Customers, they love predictability. And sometimes it's not predictable kind of what you're going to be spending, how that's going to, and having things change every month, on pricing. So I think right now we're seeing hybrid type models where, hey, maybe it's a platform fee. Maybe there's some consumption around it. Maybe it looks like what you paid last month, but there's an opportunity to kind of capture more value. I think it's still way too early. And I think all of us can kind of talk to our blue in the face, but it's, to your point, it's going to depend on what the workflow is. Every company is going to be different. And I don't think there's going to be a universal way to do things, at least for the next 5 years, in my opinion.
Yeah, I agree with you. There's too much nuance there. There's a lot to figure out still, but it's going to be interesting to see how it evolves. You talked about, picking the winner. So I wanted to pivot a little bit to my world of cybersecurity. You all picked a winner there with Protect AI and the acquisition by Palo Alto. And, for some watching the space like me, it wasn't too surprising, because, Protect had built an amazing kind of brand already early on when it comes to AI security. And of course, like Palo Alto, they're faced with the ever-present, kind of build versus buy paradigm that, establish themselves as a key player in this market. And, they made a decision there, it seems. What do you think that signaled to the rest of the market when we think about AI security, whether it's to startups or to incumbents who need to kind of replicate what Palo Alto did maybe to be relevant? What are your thoughts on that front?
Yeah, you know what? Maybe I'll walk you through kind of the whole framework that I had from the past. But I've known Ian Swanson for like 15 years. And prior to starting Protect AI, he was at AWS running go-to-market for SageMaker and the ML products, ML/AI, ML being 99% of it, AI being 1%. But what he noticed was that the most sophisticated enterprises had no visibility from a CISO perspective of, hey, how many models did I have in production? How many were externally facing? How many were internally facing? And kind of like, are they even secure? And so that was the genesis of it. And so I met him in October of 21 at a conference in Hawaii. We're in a room talking about AI security, and we're the only ones really kind of saying, hey, it's going to be a big deal. Remember, that's the year before ChatGPT came out. So we went out. There's a picture of us on the lanai chatting. 2 months later, we got two co-founders together, and we ended up co-leading that inception round with our friends at Acrew Capital. And you know what our investment thesis was? Amazing team. We had no doubt that they're going to build a product or two, right, in terms of kind of getting it out the door, just because they've done that. They have a history of that. Prior to that, he sold another company in the ML ops space to Oracle, so he knows how to do that. What we didn't know was how long it would take for the market to say, oh my gosh, this AI security thing is going to be a big deal. So we just said, look, make the money last 3 years. And, you know, this is where luck comes into play. ChatGPT comes out in October. And then all of a sudden, enterprises saw their people starting to use it, like, holy crap, how do I secure this? And by the way, we didn't have a play in the LLM firewall space at the time, but that was kind of the discussion to lead into an enterprise. And so we quickly did something that most people don't do, which is kind of expand into multiple products for a startup that didn't even have success with their first product, right? So that was the first decision that Ian presented to us, is like, all right, let's add multiple products together so we can have that one place that people could buy everything. So we bought Layer, this LLM firewall. We bought a Side Labs, a red teaming, offensive red teaming product. We did a partnership with Hugging Face where we scanned all their models for vulnerabilities and offered that for free. So we ended up having 5 different products from that point in time. And then we started getting traction with enterprise customers. And of course, Palo Alto came knocking on the door. And, you know, Nikesh had been talking about it for about 6 months. Whether we coined the term AI SPM or they did, it doesn't really matter, but it was around the same time. And I'd argue that we were there first. And it's in my newsletter, by the way, well before Nikesh talked about it. But, you know, we became hard to ignore. And the choice you make, you know, after we'd raised our inception round, an A round, a B round, the B round was done at 460 post, right? So the numbers are public. Was, do you go out and raise a round at well over $1 billion? And if you do that, you know, we're going to be in the long haul, because every round you take at that valuation, you're going to have to get a return for your investors. And so you start doing the math. How much revenue do I need to build? And the numbers kind of worked out for the founders, for the investors. And we ended up, they didn't initially announce it, but Nikesh leaked it out in the earnings transcript. It was sold for $700 million, the company. And so it's 3.5 year kind of time frame. So part of it was new attack vector, new market, amazing team, and did some unconventional things kind of early to capture that. And, you know, to your point of what does that signal to the market? I think what's interesting is that what Nikesh has said, and what I know, is that in the next, you know, 2 years, I think that all these products get folded into various products at Palo. So I think the point is that, is there an AI security market anymore? So Ian's going to run the unit for the first couple of years, but there is a feeling that these products will get embedded in the endpoint. They'll get embedded in Cortex. They'll get embedded into the cloud, in the CSPM, and, you know, blah, 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 blah. So that's where the world's going. So I have never seen a market come out of nowhere and then somewhere so fast. The revenues are still behind right now. I'm just saying, for a market that has so much VC dollars thrown at it. But man, I've never seen a market move this fast, because we went from being one of only 3 or 4 competitors to having 100 of them out there as well, kind of overnight. So
yeah, I think it's a few things that signals. Is one is like the market coming about quickly is kind of a good thing in my opinion, because it means that we as an industry, including in cyber, have learned lessons from the past. Like you talked about, you know, what am I running? Where am I running it? Who has access to it? Is it even secure? Like those kind of fundamental questions have been like core security controls for decades. And with AI, it was like, okay, let's not repeat the mistakes of the past. We need to know what we're running, where we're running it, who has access to it, what type of data it's using. You know, those kind of things were super relevant for sure. And, you know, it's interesting that you talked about, you know, them rolling it out into other aspects of the Palo platform, because another topic you talked about recently that I found interesting was it was this dichotomy between AI native versus incumbents. You talked about the speed of innovation versus speed of distribution. And in this case, we have the innovation that, you know, happened, you know, via acquisition essentially for Palo, and now they have the distribution. They're the power horse of the cybersecurity industry. They'll be able to roll this out to a massive customer base, for example. What are your thoughts on that dichotomy, even aside from Protect AI and Palo, but that challenge, even aside from cyber, even of AI native versus incumbents and speed, of innovation versus distribution?
Yeah, I'll perhaps I'll put my sneak hat on, right? Just because we're living this day to day right now. So I don't know. I kind of think about it as kind of if you remember Goldilocks and the Three Bears, right? And I think about it in three different categories. You've got like the AI native companies that they're just built for speed. You've got massive public incumbents, and maybe the first one's too hot and the bottom one's too cold. And then you've got these startups who are 7, 8 years old, with multi-billion-dollar valuations, where they are big enough where they have lots of customers, lots of data, are kind of AI forward, but small enough, a la versus the incumbent, where they can still do things really, really fast and make a dent. So using Sneak as an example of being quote unquote just right, in the last month, we launched our Sneak AI Trust platform. We just acquired Invariant Labs, which I think you've written about, right? Who does some of they're out of ETH Zurich. ETH Zurich has tremendous AI talent there. In fact, Zuck just went over there and bought out the whole OpenAI team from ETH Zurich as part of his plan. Two is we had bought a company back in 2018 called Deep Code, which it done some symbolic, analysis, code scanning and things like that, which formed the basis for our AI product. Fast forward, we've always had AI products and the largest data set of vulnerabilities. And we finally released kind of our Cursor integration. So if you go to the Cursor marketplace right now, if you're coding or vibe coding or whatever, as the code is being generated, we can scan that, with Sneak. And then we can offer the fix on the vulnerabilities there. We also have a deep partnership with Gemini, which I think becomes more interesting with Windsurf, with the people from Windsurf joining Gemini right now. And we've got stuff with Code Whisper. So I think that's a perfect example of now everything you see is all AI forward. The question then you may ask is, did we do it too late? Why didn't we do it 12 months earlier? I would say that the super old incumbents are, the more customers you have and the more revenue you have, and if you're public, you're beholden to the revenue of the next quarter. And, so that's one. So I talked to a very large company, security executive. I'm talking to a very large security company. And he said, Ed, I know I have to be in AI and I know what I need to do, but I don't have unlimited capital to invest in it or buy things because I still have to be profitable because that's what they expect from me. Secondly, I've got a feature request backlog list of 500 things I've got to deliver every quarter to land customers, either to keep and retain customers or to add new customers. So you add all that up together, how much time do I have to innovate? And I think, so you look at all that together and you're like, man, either you're an AI native startup just coming out of the gates fast with distribution, or you're a company like Sneak that has the best of both worlds and then, launching stuff and moving forward. So that's kind of how we're playing that with the Sneak angle. And you can see, Peter going, the CEO going on the offensive right now, talking about that because we do have very large customers.
Yeah, I think it's funny how you framed it, Goldilocks. I didn't know where you're going with that at first, but it makes sense to be just right. Like it could be problematic to be too big. It could be problematic, to be too small and not have a kind of a foothold already in a customer base and a brand. And so I can see that just right, kind of context playing out. And then, so I was going to ask you, sticking with that a little bit, you've also been talking about, the rise and impact of AI-driven development, co-pilots, coding agents, LLMs that are really, fundamentally changing the nature of software development, how it happens and how fast it happens, and the expanding attack surface. What are your thoughts on the implications of that, when we think about cybersecurity and where we're headed with that?
Yeah, I always think about the world in second order effects. If this happens, then what next, right? Whether it be kind of the agentic world or even the coding world. But look, the coding world itself, I've always thought about what happens. You generate more code than ever before. Sneak, in fact, is analyzing more code bases than they ever have in their entire history because of all the AI generated code. I've never seen anything from 12 months, talking to the top 3 largest banks where they're just starting to get going with AI generated code, to not only starting with GitHub Copilot because that was a safe choice, but moving to Cursor. I mean, all within 12 months. And now it's fully deployed to every engineer. So now they're saying, holy shit, these guys are generating so much code, but then there's a problem here. It's trained on vulnerable code bases. I don't know if it's secure. I don't have enough security engineers to keep up with it. So then you start thinking to yourself, like, who's going to do that part, right? Whether you do it with Sneak, whether you do it later, whether you create red teaming, right? Because I think the red teaming product, one of the things that Protect AI was selling the crap out of was their offensive red teaming as a product, not as a service, to deliver an application, then use AI to continually beat the thing down to see what the problems were, right? And then, of course, when you have LLMs involved, you start worrying about data. right? Any application you're coding, any application you build, any APIs you build, they're going to have data issues. Of course, everyone's using MCP. How do you know there's no man in the middle attack? How do you know the server you're hitting is the right server? You can't keep it all local. It's got to be in the cloud. Who's going to manage and own that, right? So there are just so many things, which is awesome. This is just whenever there's a new technology, there's a new way to invest in it, a new opportunity. So I'm actually really excited just seeing this, because finally people are waking up and saying, okay, this AI thing's starting to work with code at least. Let's figure out all the other stuff as a second order of effects.
Yeah, I'm actually with you there. Like, many in security, I'll be honest, like, I'm in this community. I've been in this community my whole career. Everyone's pretty risk adverse. We kind of sit back and wring our hands about all the things that can go wrong and like, that kind of thing. But as you're talking about, whether it's, AppSec or GRC or SecOps or, the ability of MCP and agentic workflows, like there's a huge potential here to address systemic, challenges in cybersecurity that we've been struggling with for a long time, whether it's due to workforce constraints, budget constraints, you name it, bandwidth. There's a lot of potential here, and I'm excited. So it's, I've been following folks like you, and it's exciting to see other folks, kind of getting on that same wavelength with me. So we've kind of run the gamut, from incumbents to AI natives, how to kind of discern among investments, where things are headed with cybersecurity. Is there anything else you want to leave folks with? Where can they find out more about you, the team, keep an eye out for anything else you guys have coming up, that kind of thing?
Yeah, take a look at us at, you can find my weekly newsletter at www.what'shot.it.vc. And I'll cover the trends with a little kind of preamble for myself. The one other thing that I want to touch on is just kind of the agentic world moving forward, right? I just think that, some of the infrastructure that has to be rebuilt can be things like a portfolio company called Agentuity, which we call it like the Heroku for agents. So you build an agent, you deploy it, and everything just happens magically, right? You don't have to go through all the other stuff that you would at AWS or GCP or whatever. And then along with that, we've got an investment called Keycard.ai with a couple ex-sneakers and the ex-chief architect at Auth0. And they're going to build kind of that authentication and authorization platform for devs to easily build it in with a couple lines of code. And the important part too is that when agents have their own identity, you can have their own audit trail, right? Which I think becomes very, very important in an enterprise. So those are some of the things we're looking at. And if you're a founder, a technical founder, and you've got a unique insight and you have been building stuff and shipping stuff, even at larger companies, but you're ready to start your journey, feel free to reach out.
Awesome. I appreciate you jumping on. Like I said, I've been a follower of your newsletter and content for a long time and really appreciate that, as well as what you're up to at Boldstart. So thanks so much for coming on, and thanks for everyone who tuned in as well.
Thank you. And Chris, by the way, I do include some of your stuff almost every other week. So you keep doing what you're doing as well. So I love the easy deep dives into security research and the bowels of security. So thank you.
Awesome. I appreciate that, man. Take care.
Cool. You too.